Hello, welcome everybody. This is Around the Beach. We were formerly calling it Around the Piano. We are now Around the Beach here. Our media sponsor is Beach Booster here in town. And we have with us today, we have Dave Cubitt. Hello, Dave. How are you today?
Hi, David. Thanks for having me.
Pleasure. And we have Jerry Hogenhout.
Hey, Dave. Thanks for having me.
Good to have you guys with us, and thanks for joining us at home. So, couple of objectives that we want to do today on Around the Beach. First of all, we are in this incredible facility here, which is the Beach One Bar. Dave and his partner Pete, the Beach Bar. Okay, Beach One is the beer, right? There's a beer brand that we all know and love, Cerveza.
Yeah.
Beach One beer by the Wasaga Beach Brewing Company.
Wasaga Beach Brewing Company.
And Dave is the founder of that company together with Pete. He works together with Pete, both musicians. By the way, Jerry's also a drummer. So he was in a Kiss band that traveled all across Canada.
All right.
Yeah. So we got a couple of drummers. Right. And this beach bar, which you can get a semblance of the view. Unfortunately, it's not a very sunny day. It's a little overcast, and the weather just took a turn. But we were having, well, I mean, you know, if you were in the province of Ontario, I'm sure you enjoyed. The last few days were amazing, and it's a little cooler, but still no rain. So today is a very special day because it is the 2-year anniversary of Fly Fearlessly, and I will let Dave tell his story. It connects to ALS and a fundraiser that is happening today at the Beach Bar. And if you're not planning on coming down, you will want to come down. Presentations at 7 p.m. Silent auction starts at 4. Colleen, hi, welcome. Come on and sit down. Presentations start at 7. 4 o'clock. The silent auction is open, and there's live music and other entertainment through the day, starting at 3:30 and running up till 11 p.m. tonight. DJ, bands, all kinds of performers. So come on down. If you weren't planning on coming down, be sure to join us. And Colleen Bannerman just joined us. She's actually here. She's one of our audience members. And so she's here today as an audience member. Colleen from Wasaga Tax and Accounting. Okay, so back to Dave. Dave, if you would share with us your personal experience with ALS. We know your beautiful wife Jane passed earlier this year, so help us understand the background, if you would, please.
First of all, Dave, thanks for podcasting from here at the Beach Bar. Yeah, you're right. We've got a bit of an overcast night, but or day, but it's gonna be a good day. I think there's a real good feeling around here right now, supporting ALS Canada and the Jump for Jane campaign. Jane was diagnosed with bulbar ALS in November of 2021. And if you know ALS, there's the diagnosis for that is basically you're about 3 years is your life expectancy. And 2 years ago, Jane took to the skies and jumped out of a plane and was the first person to land on the beach as a public citizen in Ontario, for sure, to be able to land on the beach. And it was a great feat for her to be able to do that. I think she faced her fears and did it all in a good cause for ALS and just awareness. The community has been absolutely incredible for us and supportive along the way, whereas Jane also did over 40 tattoos with friends and family all around Ontario and Canada, doing a tattoo with her. So they have that constant reminder now that she has since left us now. So she passed away in February on her own terms, and I'm really proud of her and what she's done for ALS and bringing awareness to this this community, for sure. This really rallied around. So today marks 2 years since she did her jump, and we've lined up 14 jumpers to jump. Unfortunately, we won't be doing today. I think it's scheduled for next Friday, but we've actually looking at the donations. We're almost at $10,000 right now for this campaign for Jump for Jane. And really, really thankful for the entire community, for yourself, for everyone who's been involved. And today is a very special day, so it'll be a nice memory and just rallying around. Really, really happy about this.
Yeah,
So
absolutely. We're happy to be here in support of the event. And you know, I know, Dave, that everybody here in Wasaga Beach that I know loves you and love Jane. You're always
Jane.
like you're always one of the first if there's a fundraiser, somebody needs a basket or whatever it is. So I'm sure that has a lot to do with the support that you're seeing here. My wife Debbie and I have been here for less than 3 years, so we're still getting, you know, still getting to know people and having a good time up here. But definitely encourage people, if they're watching this from anywhere, come on down to Wasaga Beach. You got to visit the beach bar here in Wasaga Beach. You can see the view. It's incredible. It's the longest freshwater beach in the world, and this is a place, the beach bar, live music all the time. I don't think there's anyone who's had the amount of live music here this summer. Like, the schedule's been unbelievable.
that was always one of our mandates, was to every weekend have live music, whether it be a Friday afternoon or Friday night for sure, Saturday night for sure, Sundays, matinees, things like that. So live music, since music is so near and dear to myself and Pete, that we have a full stage, a tiki stage here with a full sound system. So entertainment has been a big part of this of the beach bar itself.
Yeah, for
Yeah.
sure. Great place to come and hang out. Now, Beach One Cerveza, that can be purchased anywhere or I mean, where can you get it?
Yeah, we're available in the LCBOs, LCBOs across Ontario, as well as the beer store and various grocery stores. So yeah, we've got some good coverage, and you know, we can pick it up anywhere from Sarnia to Windsor to Thunder Bay, and everywhere in between. So
Right.
Yeah.
So if you can't come to Wasaga Beach, at least you can get some Beach One
sensing some
Cerveza.
sun.
Right.
Sun.
Yeah. The sun. See, we're
Yeah.
talking about Beach One Cerveza.
Exactly, the sun comes
And
out.
what do you know? We figured we'd wait till the end of the podcast before we started cracking open the Beach One Cervezas.
Yeah,
You know, given that we're going to be talking about mortgage investing and things like that, it might.
Well, I might add that the Beach One Cerveza is now taking up way more room in our cottage fridge than it ever did.
okay. Well, I like to hear that.
I have acquired the taste.
Right.
That's
Excellent. Great. Yeah. Little taste of Wasaga Beach anywhere
You
in
got
the
it.
province.
You
All
got
right.
it.
Excellent. Great. So, Dave, was there anything else that
No, I think thank you for
Yeah.
being a part of this, and you know, for allowing us to have a voice and to share the story with you know, with the community. And like I say, the community has been wonderful. We've been really fortunate for being able to share our story and all the way through. And that's something that you know, the community has really rallied around. And awareness for ALS. ALS is a really, really horrible disease.
yes.
Um,
And people are watching, they can go to flyfearlessly.org and
Yes.
they can donate. And for donations greater than $25 and above, they can get a tax receipt.
yes,
So all the proceeds go directly to ALS Canada
they
through
do.
flyfearlessly.org.
They do. And in Jane's name, as part of her Fly Fearlessly
Right.
page.
Right.
And that's something we're just going to continue doing and keep working on as long as we keep going.
Yeah.
So
And I know there's a tremendous video. Is it on the website, the video?
the website's going back up. The
Mhm.
website's down right now, but we're
Okay.
putting it back up. So
Right.
there's a great video. There's a great story. Jane's story is all there
Right.
also. So
Yeah.
but that's on
great video of her
flyfearlessly.org.
landing on the beach. I remember.
Yeah. Oh yeah. No, it
Very
is.
much
It's
fun.
it's
Yeah.
a fantastic video. So
Yeah.
and you can also go to the Fly Fearlessly page on Facebook also. So
Right.
there's a few things on there as well.
Right, definitely. And I'll mention also that Les Farkas from Wasaga Skydiving. Is that correct? It's Wasaga Skydive.
Yep.
Is also part of this, with the
L-
skydiving portion.
Les
You
has
guys were planning
been-
this for a while. I
Yeah, he's been a tremendous advocate for ALS also, actually being very close to it with his aunt. So he's got, reason in terms of being associated with ALS as well. But he's been tremendous by suggesting, doing this whole thing. And that's how, the Fly Fearlessly came up from Jane,
Right.
being fearless
Yeah,
and flying fearlessly, because that's what people with ALS do every day. I mean,
Yes,
that's what
right.
they do.
right. And I know there's a lot of volunteers involved. Some of them are here working away, preparing, decorating the bar for the day's events.
Yeah, people like Kathy Lane
Mhm.
has been her decorating and her creative talent is amazing. People like Marlene
Yeah.
Parkins, also big community person
Right.
for everything around there, as well as I think Zan is here and Anne is here. We've got a lot of volunteers that are helping
Right.
just put this together. So it is going to be a great night tonight, despite if it's a little cooler, wear a red leather jacket,
Yeah.
or
Yes.
or
Well, I brought my winter coat.
yeah.
already,
So
Yeah.
it's still going to be it's going to be a really good feel good evening
Yeah.
either way. So
Well, it's
we'll be
supposed to clear
presenting.
up too, so the
Nice.
sun's
Actually, it
supposed to
doesn't
come
look,
out.
doesn't look
and
so bad. Yeah.
It's not even that windy, it's just
Yeah.
a touch cooler, but I guess that's September for you,
Well,
right?
we'll warm it up at the beach bar here
Right
with some
on.
real warm hearts.
Yeah,
So
exactly.
that'll keep
Yeah,
it warm.
and a couple of beach one
So-
beers wouldn't hurt either, right?
Yeah, that might help a little.
Right on, right on. Okay,
So-
Dave, so thanks again for sharing your
Mhm.
story and for all you do for Wasaga Beach
Oh, thank you.
and beyond. And I hope I know it will be a meaningful day and a successful day. And yeah,
Sure,
so you're welcome to stay. I'm sure you got a ton of things to do, so if you,
We have music starting in just about an hour.
an hour, right?
So
Yeah.
the music will start in an hour and it'll go right through till the end of the day, the end
Right.
of 11 o'clock at evening.
Yeah,
So we got a lot of good performers coming up and entertaining us, and
it's
that'll
gonna
be
be
a fun
great.
day.
It's
Yeah.
gonna be great.
Yeah.
Can't wait. So you're welcome to stay for the rest of the broadcast if you wish, but I know you've probably got a ton of things to do. So if you need to take off too, that's
Yeah, no.
understood. And thanks again for being part of it.
Well, I appreciate you having me. Like I say, any time we can talk about, ALS, anytime we can just thank the community, I think
Yeah.
it's a great opportunity. So
Yeah.
I appreciate the
Yeah.
opportunity. Thanks, David.
Thank you, Dave.
Thank you.
Thanks very much.
Thanks for having me.
Good. Okay. So on to Jerry. So let's talk about the rest of our agenda today. Should you pay down your mortgage? We're going to talk about passive investing. Dave shaking his head no. Passive investing in real estate or any kind of investing in real estate, because Jerry Hogenhout is an aficionado on that topic. I'm also a dealing rep and a mortgage broker. So we're going to talk about also what to look for when investing in a mortgage. There's five key things that you should consider when you're investing in a mortgage. And so we're going to talk about that too. And but first, let's start with Jerry Hogenhout. So Jerry Hogenhout is not your typical accountant, because he's very much involved in investing. He has a company called Canadian Investment Services. So Jerry, if you'd help us to understand, as an accountant, what drove you to think so much about investing and why real estate investing?
Well, thanks, David. And, like the other David, thank you for inviting me here. Let me just say, the other David's story was very inspiring, and thank you for organizing this and letting us hear David's story and, allowing me to be involved and contribute to this wonderful cause.
I'm
So-
going to move this closer to you so that people can be sure to hear. We want to make sure people can hear you talking. So there we go.
Can they see this wonderful background here? That
Yes, they
we're,
can. Now, the only thing is we've got your head cut off there a little
Yeah,
bit.
well,
So I'll move this.
Don't
back
cut
a
out
little
my
bit. There.
hair. Don't
I
cut
think
out
we've
my
got your-
hair.
You look perfect there.
But,
Beach is
isn't
behind you
this
and
great?
everything.
Look at this. Look where I am, people. Isn't this
Oh, yeah,
awesome?
this is the place to be.
Anyway, so yeah, thank you, David. So Yes, I do. I'm a chartered professional accountant. I spent 10 years at Deloitte Touche in their tax department, learning my thing. And I needed more. As my good friend Colleen will attest to, he's her being an accountant. I needed more. I was interested in investing. I dipped my toe in the water early in my career by buying a rental unit and was amazed, the matrix of it all, how efficient it was. Oh, I'm collecting rent. Oh, they're paying down my mortgage. Oh, I get to tax deduct my interest. This is all pretty cool. So that kind of piqued my curiosity, which actually led me, when I left Deloitte Touche, I set up my own tax practice. And then I wanted to add investment services to that. And certainly was continuing my interest and growing my real estate portfolio. But certainly as an investment advisor, we had a wide array of different investment products, anywhere from publicly traded assets, stocks, mutual funds, to also other different types of real estate investments. Because when you say real estate investments, that's a very wide umbrella. There's a lot of things, joint ventures, limited partnerships, fix and flips, investing in mortgages, apartment building, real estate income trust. There's so many things that fall under real estate related investing. And that was my jam. That was just, I hit my aha moment when that happened. And so that's really what I focused on. So my goal was always to create a company that, which I have, which is Canadian Investment Services, where we really focus on real estate related investments. That's not all we do. We do access the other marketplace, the public stock market, but certainly our focus is accessing the real estate investment marketplace, either through third parties, so we can use other people's investment products, or we create our own. So we create our own joint ventures where I get my clients together. We buy apartment buildings. We bought 3 apartment buildings in Alberta recently. We do that with our clients' money and our clients as investors. So yeah, creating our own investment products are really, that's the real jam. That's cool. But we just like to be able to offer the clients everything. We're strong believers in financial education and information. We don't like selling anything to anybody. We like the client to be properly informed, get the right education, get them involved in the decision-making process of what they want to invest in. So we're very proud that probably all of our clients are invested in investment products that they want to be invested in, not just something sold to them. So it's a different approach, unique, but it's working. It's good. So.
And I know, Jerry, you're a believer in REITs, which stands for Real Estate Investment Trust. And we'll talk about that in a minute, but I just wanted to mention that we also have with us today Steve Blasiak, and he works with me at the Exempt Market Dealer that I work at. And I've asked Steve if he'd be good enough to talk to us about what the exempt market is. Steve, are you still with us? I see you're connected. You're on mute. Okay. Well, maybe he stepped out to refill his coffee or something. Yeah. He's letting out the cat. Okay. So Steve will join us shortly, I'm sure. But so and I also made a promise to talk about mortgage investing. So, but let's carry on with Jerry then for now. So what's the allure of a REIT? So Jerry, actually, I'm a mortgage broker, but I'm also a dealing rep, and Jerry actually refers people to me to help them with the REITs. So Jerry, what is a REIT?
Okay.
And why do you suggest it for people?
Okay, so well, it's not that I suggest it. It's when we talk about real estate investing, we're really looking at 2 different things. One is a little more speculative, where we're trying to buy something and we hope it goes up in value. So we look more for appreciation. That's one side. The other side is really what I call buying cash flow. So we're not as concerned with the appreciation, but we're still concerned, but we focus more on the cash flow. So when we talk about REITs, real estate investment trusts, in simple terms, it's just a group of apartment buildings. Okay, multi-unit buildings, 20, 30, 40, 50, 100 unit buildings. We all start, when we start as real estate investors, we buy a rental property and we figure out how it works. And isn't that nice? One person paying down my mortgage. Well, when you have hundreds of units, you have hundreds of people paying down your mortgage. So that's a good thing. And then you have economies of scale, which means you have the infrastructure to hire the proper management company. You know, you have enough tenants that if there are some vacancies, it's not that big of a deal. So the thing I really like about real estate income trusts is, again, when we manage money, there's two very important things we have to do. One, obviously, is get the client a rate of return, but we have to protect their capital. Okay, so if we took all of the client's money and went into the stock market, that's very concerning to me because money in the stock market, but there is really not very good protection of your capital. So at Canadian Investment Services, we really like to focus on the protection of capital first and the rate of return second. In my opinion, 40 years in this business, there's nothing better than the right type of real estate, because there's good real estate and bad real estate, but there's nothing better than the right type of real estate, good real estate, to properly protect your capital. So what is good real estate? Well, in my opinion, it's multi-unit buildings in the right location. For example, we bought a 29-unit apartment building in Brooks, Alberta. I've never been there. I still haven't seen the building today, but it has a Walmart superstore in it. Okay, location, 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 close enough to Calgary. So all those things you look at and you go, okay, well, that's, you know, Walmart does they spend a lot of money finding the right locations. So we're happy with the location. Alberta is very landlord friendly compared to Ontario. Ontario is horrible, the absolute worst province in Canada to own a rental property. Doesn't mean you shouldn't own a rental property. It just means you have to deal with all the very skewed landlord tenant rules that favor the tenant. Alberta, it's very fair. Doesn't really favor anybody. You don't pay your rent, you have to leave. It's pretty simple, you know, and if the market dictates that the rent requires an increase, you're allowed to do that. So it just makes more sense. It's more market driven than government driven. Ontario is government driven. Alberta is market driven. And then you look at that marketplace, you look what's going on in the whole, you know, world nationally, like as we all know, in the last 3 years since COVID, our country has borrowed and printed an incredible amount of money, $1.5 trillion. And what does that mean to real estate income trust? It means a lot, because in order to justify that debt, they have to keep the gross domestic product up. How do you keep the gross domestic product up? You need people, you need immigration. And we've been doing that for 30 years or more. And it's more now than ever, and it will continue to be more than ever. So when you think about what's happening, all these people are coming to Canada. Toronto is priced out of the market to a certain degree for many of them. So we look out east and out west. So when we look out west, we see a lot of people going out west. You don't have to go to Alberta to work in the oil fields. Now you need an internet signal. You got Wi-Fi, you can set up your own business in Alberta. So we see that as a very good market for some certainly growth and protecting that capital, because again, we know people will go there. We know that they will rent. We know that home ownership is you know, out for a lot of people. Many people are happy to rent. When we look at a business model, we look at what drives the revenue. In any business model, a beach bar or whatever we're doing, what drives the revenue? In a rental market, it's rent. Okay, that drives our business model. So what's going to happen to the rent? Well, vacancies are zero. The rental is going up. So nothing is going to happen to our revenue stream. And then you look at the cost side of the equation. Well, property taxes, well, now we got our mortgage interest rates, which is our topic, so we're getting beat up a little bit on the mortgage interest if you have variable compared to fixed. But I'm somebody who says, as bad as these interest rates are, from a investment point of view, those costs are just going to get transferred to the tenant eventually. So the rents are not going down. And even if they did go down, it would not be enough to impact our business model. So these high interest rates are concerning now, but eventually it's just going to increase the rents. And in Alberta, we're able to accommodate that and out east. So so again, we like the revenue stream. Our expense side is good. Appreciation, well, apartment buildings, rental buildings are based on a cap rate value, more so than the market. The one thing I like about REITs is there's no correlation to the stock market, nothing, zero. And there's really no correlation to the housing market. I mean, the housing market can go crazy, but the apartment building is just going to continue to be valued based on a cap rate calculation, a capitalization rate, which is, for those that don't know, it's basically just taking the rent minus all your costs, not your mortgage, dividing those numbers, and we come up with the cap rate. So that formula will always remain regardless of what's going on in the housing market. And the formula, the cap rate formula will increase the value of our apartment buildings if the rents go up. Well, we know the rents are going up. So there is appreciation. So we are buying apartment buildings for appreciation too, but that's not our primary purpose. Our primary purpose is to buy cash flow. So apartment buildings, and in fact, they're easier to buy than a normal property because apartment buildings, basically, we have lenders. David, you have an array of lenders that will look at the value of the building more so than what my income is or somebody else's income that might be on the ownership. They'll lend to us on our value, our cap rate value. And as long as we can put in enough of the money, they'll lend us the money, regardless of our credit score, regardless of how much income we make. So they're actually easier to buy. They're
Right.
easier to manage. There's because we have economies of scale. So I can go on and on and on. But when clients say, and the sweet spot is always that 10%. If we can make a client 10% and protect their capital, that client is happy. Okay, and I can honestly say every single client that I have ever put into a REIT is a happy investor. Every
Okay.
single one of them.
So thanks for that, Jerry. So now, one of the questions that we promised to address today was, should you pay down your mortgage? So at a time when, that sounded like the owl. At the time, that's the device, by the way, we use for the broadcast. So you turn it on, it goes. So now with rates up around 6%, sometimes higher, sometimes lower, but does it pay to pay down your mortgage, or should you be looking at investing it in some kind of real estate or other investment?
Great question, great topic. I'm going to be a lawyer on this one, saying, well, maybe this, maybe that. So should you pay down your mortgage? Well, maybe. Okay, so we also do financial planning. So when we put on our financial planning hat, these are things that we address with clients. Sure, as the interest rates go up, if you have access money, basically if you look at what interest rate you're paying, if you pay down your mortgage, that's basically what you're making on your money. So as your interest rate goes up, if you do pay it down, that's what you're making on your money, and that's not a bad thing. The one problem I have, and again, when we do financial planning and investment management, I sit on both sides of the fence. One side of the fence is you cannot have enough good debt. The more good debt you have, the more money you can make. The people that are rich with real estate have always used OPM, other people's money, be it the bank's money, be it investor money. So that's one side of the fence. I'm also somebody who would love to have zero debt, have everything paid off, and just have a whole bunch of assets. But you need the debt to grow the assets. So it's a very conflicting question in my world because I believe I believe in both sides of the fence. Should you pay off your debt? Yes. My problem is if you pay off your debt, do you still have access to that money? And that's really how I answer that question. I'm a strong believer in lines of credit. I'm a strong believer in cleaning up our balance sheet, we call it. As we're younger, middle age, we buy real estate, we get a little bit older. When does the time come to go, okay, you know what, let's just sell stuff, clean up our balance sheet, get rid of some debt. So as you get into your 40s, 50s, 60s, those are things you start looking at. But we also always want access to our equity, whether we ever use it or not. So I'm a real advocate of lines of credit. So if you have a line of credit and you have access money, by all means, pay down your line of credit because you can get at it again.
Right.
That money is still there for you.
Right.
So that's important. If it's a closed fixed mortgage, you pay down your mortgage, you don't have access to that money anymore.
Yeah, I agree with you, Jerry, 100%. I mean, it sure is tempting now with rates at 6 and 6.5, because if you're looking for zero risk returns, that's a surefire way to get it, right? Pay down your mortgage, but it's a question of liquidity also, right? Because if you use up all your cash, then you've got no liquidity. I have clients that come to me for a mortgage where they've done a great job paying down their mortgage, and now they want to help out an adult child to purchase a property or do improvements to a property or something like that. And you don't have access to that cash, it makes it more difficult. I mean, there's, especially if you're late, retired, right? So great idea to get a line of credit or home equity line of credit set up while you qualify for it, right? Because once you retire, it becomes harder to get access to that equity, because even though you may have so much equity in your property, banks do not want to take any risk to have to take action against a borrower. So they are going to lend based on income and liquidity. If you've got income and you have liquidity, you can show you have investments that you could draw on to service the mortgage. But if you don't have that, it's going to be difficult to access that, or expensive to access with a reverse mortgage or something like that, which is good for some people, but the rates are higher. And yes, Jerry.
Yeah, so I totally agree with what you're saying. And when we do when we take all this stuff that we're talking about and encapsulate it into our financial planning and especially retirement planning and estate planning. So when I say financial planning, that's more for today. Retirement planning is more for tomorrow, making sure, the rest of your financial life. And then ultimately estate planning. We build assets and want to pass it through our estate. So when we deal with that, lines of credits are very important in that I always think everybody should have access to a line of credit. I'm not saying use it. You may never use your line of credit. That's okay, but you have access to it. And when we do our financial planning, retirement planning, obviously we use somebody's, their existing assets, what they have, to try to help them plan the rest of their financial life. But there's three components that we deal with when we deal with somebody's financial life and we talk about the house. One is their existing asset, whatever they have is going to, hopefully gets them through to the end of their life and has lots to pass on through their beneficiaries. If for some reason we're running out of money in our lifetime, we need to access our line of credit. That's source number two. Source number one is the assets that we have, be it RSPs, be it rental property, be it whatever. Source number two, when we run out of that, if we do, is our line of credit. Source number three, once our line of credit is used up, then in my world, and only then do we look at a reverse mortgage. And by that time, we've made it. Like, not many people are going to run out of money, run out of their equity, and run out of the reverse mortgage money. So those are the tools that we use to plan. So when we say pay down our mortgage, which is our topic, again, I always encourage everybody to get a line of credit portion or the whole thing on the line of credit. And then that question is a little more relevant, more easier to answer. If, should I pay down my line of credit? I've got 20 grand sitting here, 100%. Pay it down because you still have access to it. If you pay
But
down.
don't pay down the portion that's at 3.5% still. But
Well,
if
no,
if
yeah,
let's say
yeah.
you're on a variable or you're coming up for renewal, and now the bank is offering you money at 6 or 6.5%, it's a good question. Now, the other thing I think it's worth pointing out is that if we're talking 6.5% return, these are after-tax dollars, right? So
Yes.
you'd have to earn more than that
Yeah.
even in a pre-tax,
Yeah.
unless you're using registered funds.
Yeah, that is very true. So honest, it's funny because the way I work, this bank rate, this increase in the bank rate has really messed up a lot of my strategy, simply because I really in the past I've always preferred variable mortgages. I love variable mortgages. Well, who would have known that the Bank of Canada would have jumped these interest rates as much as they have within 1 year? Crazy. It's criminal what they have done. But anyway, they have done it, which makes you think.
And they got all their bonuses. It was about a month or so ago. The Bank of Canada doled out to all of their employees
Oh, it's,
all kinds of bonuses. And I don't know, are they gonna feel the same pain? Been doing reading, as I'm sure many of you have, on interest rates going up, and have we turned the corner? I mean, fortunately, this week, the Bank of Canada met again. They did not increase the rate further, but I mean, who knows, right? Because they told us a few months ago that they were done increasing rates. And there's this thing I remember, you don't hear the term often. I remember from back in my days as going to school, the multiplier effect, right? When things are going down, they can start to go down faster than when things are improving, right? Because if your paycheck is less, your mortgage comes up for renewal. And a lot of mortgages are going to be coming up for renewal in the next 1 or 2 years. And all of a sudden your rate's significantly higher. So now your disposable income is considerably reduced. So now you used to go out and spend a certain amount of money on different things. Well, not only you are not spending that money, but also the people who, your restaurants and whoever was receiving that money, they're not receiving it either. And then they don't. So that's the multiplier effect. And I think we're at a very critical point right now.
Yeah.
And, with the Bank of Canada giving themselves all these bonuses, I can't help but be a little concerned, because they may not feel it like the average Canadian or Ontarian or whatever.
Yeah, I totally agree. It's very sad, actually. It's sickening what is going on, because when you think of why are they raising the interest rates? To fight inflation. Why did inflation happen? Because they print money like crazy. Okay. And when you talk about inflation, you look at the things we need. We need to eat. We need a place to live. Most of us need a car. Okay, so when we look at food, my God, these food companies are making a fortune. Fortune. Loblaws, $500 million profit in the first couple of months. So these food companies are making a fortune, which is the price of the food is going through the roof. So that's causing inflation. So while the suppliers of the things we need gas for our car, they're making a fortune. Everybody's making a fortune on the things that we need, which causes inflation, which causes the Bank of Canada to raise our interest rates. But why doesn't the bank attack Loblaws? Why don't they make them reduce their profit? How can they make so much profit and as a result cause so much pain to the average Canadian? You're right. These politicians, they're not feeling the pain, but we are. There's people losing houses. So, it's great to say, well, if we lower the rates, we're gonna have more inflation. Well, you know what? Let's just curb inflation by reducing the cost of everything we have to do. Don't let those food companies make $500 million in 2 months. Don't let the oil companies make so much money. Put in restrictions on that stuff. So you gotta look at the reasons why there's inflation and maybe attack that too, instead of just letting all these big companies make so much money.
Okay, so we have a question and we're not going to take it yet, but I just want to remind you that if you do have a question, this includes you, Colleen, of course. Colleen's got a list of questions, but I want to just talk, and also Steve, I don't know if you're back yet. Steve Blasiak, if you're back, let us know because we do have a question
He did
for
send
you.
me something to say he's having some problems with his phone or.
So anyway, so I promised I'm going to take a little segue here, and I'm going to talk about mortgage investing because I always get questions over the years. People love to invest in mortgages, and I think there's at least a couple of reasons for that, and that is that you can usually see the underlying asset. You can do a drive-by if you want. And also in real estate, especially residential real estate, it's not rocket science to determine what is the value of the investment, right? Because there's usually comparable properties on the street and other sales. So you know what the value is of the property. So I think those are a couple of reasons why people like mortgage investing, but it's a little harder to find good mortgage investments. And so many people ask me over the years, which is one of the reasons why I got a dealing representative license, so I would have access to different products. And actually, if people are interested in mortgage investing, I also have a MIC that I could refer them, connect them to a mortgage investment corporation where you can earn 8.5% to 9% money. I've got some of my money in there, and I have a good understanding of the product because I've tried to use this lender to fund some of my deals. And when they decline the deals, it's frustrating on the mortgage broker side, but then on the investor side, I think to myself, well, it's good to know that these guys are really doing their due diligence, and if it doesn't fit their model, they're not going to invest in it. But what to look for if you want to become a mortgage investor? So 5 things. Okay, good. Colleen's ready to take notes. 5 things. Number 1, the location and the marketability of the real estate. That's key. I've had loan opportunities where people have asked me for a mortgage. It's a small town somewhere in Ontario. I'm not talking Wasaga Beach. Wasaga Beach is highly marketable at this point in time, but some small towns, very small populations. And I have gone and have talked to lenders who have been in the business for decades, and they told me stories. Sometimes you can sit with a property if you're trying to sell it for a very long time. So marketability of the real estate and the value of the real estate is key. That's number 1, I would say, in private lending. Number 2, how much equity is there in the property? What's the LTV? LTV stands for loan to value. So if a property is valued at $1 million and you have a $400,000 first mortgage on it, and now you want to borrow $100,000 as well, that's 400 first plus the second of 100, the LTV is considered 50%. So that means that even after fulfilling the loan, there's 50% equity in the property and 50% debt. That's a good buffer, a good margin. So every lender has their own LTV, could be 65%, 75%, could be higher depending on how much risk you're willing to take. But LTV, the amount of equity in a property, is also very key. Number 3, exit strategy. How are you going to get the money back? If the people are coming to you and they're not getting the money from the bank, that probably means that, well, it might mean that they're not proving income according to normal requirements and guidelines, but maybe they've got some money coming in. Private loans are usually short-term loans, like you're typically helping somebody out of a short-term problem and which is expected to improve, right? I mean, if it's not expected to improve, they should probably just sell the house. So, you know, unless you have a property that is generating like amazing income for, let's say it's an Airbnb and it's like super hot and generating great income. But if it's not, it's hard to carry a mortgage of, you know, 8, 10, 12, 14% rate for very long. So exit strategy is key. What's the event? Are you expecting an inheritance? Are you looking for a job? You just recovered from some kind of illness. You're buying out a partner. Something is going on. And there's got to be an exit because, you know, even though you know as a private lender, you could take action if you needed to. It's a headache that most people want to avoid unless you're a lawyer and you do that for a living. And, you know, you might say, oh, here's a good one. Lots of equity, money safe. We're going to take action and run up legal fees. No problem. Well, I usually try and avoid those scenarios because it ends poorly for someone, usually the borrower. So not a good scenario. Income. Can they service the debt? And as I said, if they cannot service the debt right now, what is the exit? The last thing, number 5, is credit. What is their credit like and why? You want to know the whole story. So if there's a credit issue and there's an explanation for it, you want to know why it is that way because you want to know everything you can about doing this loan. And some people are in the middle of getting their credit, like they had a problem and now they're in recovery, but maybe the credit hasn't bounced back yet and they're not getting bank money. That's a good type of loan opportunity. Or is it somebody who's always late and it's been a, you know, bad credit has just been going on for a very long time? So, because if that's the case, you know, you can see the habits of borrowers and users of credit, how they handle their credit. That'll tell you something about how things might go in the future. Again, so you want to know the whole story. So those are the 5 things. So I do have mortgage investment opportunities from time to time. And as I mentioned, I know of a good mix, but again, the dealing representative and working with an exempt market dealer is something I got involved with a few years ago because I thought it made sense to be able to offer people good investments. Steve, are you back yet? Are you able to talk to us about what an exempt market dealer is? Okay, so I'll briefly talk about what an exempt market dealer is. So exempt market dealer is somebody who raises money outside of the stock market. So and you're considered an issuer. So, you know, there could be different kinds of legal structure, could be a mutual fund trust, could be other types of structures. You cannot buy and sell shares on the stock market. So when you do invest in one of these REITs, for example, that we were talking about, consider your money to be set aside for at least a few years. It's not something you can quickly buy and sell, but one of the things we're required to do as an exempt market dealer and as a dealing rep is look very closely at people's assets, their liquidity, their income situation, because anything that we do offer and sell needs to be suitable for your particular situation. Even though it's a REIT, as an example, there are many different kinds of investments in the private or exempt market world. Well, I lost my train of thought. Jerry, help me out. Maybe it's time to go to some questions. So, Colleen, you want to start, and then we'll go to Himanshu. He asked us a question too.
Okay, so I'm gonna go all the way back to REITs. How is the 10% or whatever they're earning on the REIT paid to the investor?
Okay, so thank you for the question and welcome, Colin. So again, when we look at real estate in general, we're either buying kind of for appreciation and or cash flow. So a REIT has both, a little more slanted on the cash flow side. So most of us can understand how a simple rental building works. You have a rental property, you collect rent, you pay the expenses, you have net rent left. A REIT is the same thing, times 100, 200, 300, 400 units. So the REIT itself collects all the rent, pays all the expenses, and then there's net rent left over. So that is available to the investors. So they will distribute that to the investors, or they have the option of distributing to it. They don't have to all of the time, but most of the time they will distribute the net rent to the investor. So that's what we call a distribution. That's in my world what we call investing in cash flow. Okay, so we're going to get that distribution. And let's just say the distribution is 6%. Keep the math really simple. You put in $100 and the distribution is 6%. So you've made 6%. When the expectation is to make 4, we would also, throughout that year of making 6%, we've had 100, 200, 300, 400 people pay down the mortgage. If our rents go up, which they do, we would have an appreciation in the cap rate. So when you ask how is that 10% comprised, in a typical rate, we put 100,000 and we get a 6% distribution. So there's 6% of the 10. And we would normally expect an appreciation of 3, 4, 5% on the actual value of your investment. So the REIT, again, sometimes we invest 100% in cash flow, which would be a mortgage investing. Sometimes it's 100% appreciation. The REIT has a mixture of both with a little more balance toward the cash flow.
I think it's worth mentioning too, that the distributions that you do receive are not considered interest. They're
Yes.
considered return of capital.
Yeah, and that's a real benefit
Yes,
because
that's what
whenever
I'm
we have
saying
money,
here.
Right.
Capital gain
Yeah.
is it's not dividends, it's not interest, it's capital gain.
Correct.
well, so here's what
I'll
happens.
let
So back to my example, we put $100,000 in and there's 6% coming back as a distribution. So anytime we have any money anywhere, if it's mortgage lending, we earn interest. So there's kind of 3 things we always think of that we can earn: interest, capital gains, or dividends. And now we introduce this other thing that's called the return of capital. And from a tax perspective, if we earn interest, 100% of that money is taxable. If we earn capital gains, we only have to put 50% of that money as taxable income. The other half is free. If we earn dividends, to keep it simple, 75% of what we get from a dividend is taxable, 25 is free through a dividend tax credit. Return of capital, none of it is taxable. So here's what happens. You invest 100,000, you get a 6% distribution, $6,000. You receive that, $500 a month, and you pay no tax. Now, that sounds too good to be true. So what happens is the money that you receive for free lowers your adjusted cost base. So what does that mean? We put in $100,000. We received 6% free through a return of capital. Now our adjusted cost base is not 100, it's 100 minus the 6,000 we received for free. So our adjusted cost base is 94,000. So now let's say the 100,000 went up the 4%. We made 6 as a distribution, it goes up 4. So now our investment is worth $104,000. And at the end of the year, we say, let's sell it. 104 minus what? Well, we paid 100, but our adjusted cost base has been lowered by the tax-free return of capital. We sell for 104. Our adjusted cost base is 94. We have a $10,000 capital gain, half of which is taxable. Now, is that good or bad? It's good that we receive the 6% distribution for free. When we eventually pay the tax on that, we're paying it as a capital gain, which means half of, when we eventually pay tax, half of it will be tax-free still. So we'll never pay tax on that stuff. So that's a good thing. Plus, it's important that we can plan when we want to sell. So we get to decide when we trigger that capital gain. So that's a really good thing. So the tax-free, the return of capital component of a real estate income trust is a huge factor when we look at what type of income. Because if somebody's already in a high tax bracket, but they need cash flow, return of capital is beautiful because you're not paying any tax on it.
So it's almost like a protected. It's like a protected investment until you cash it in.
Yes, now, there's many variables to what I've just said. Why do we not pay tax on our distribution is the question I always get asked, and it's complicated, but I'll try to explain it. What happens is with buildings, we can depreciate them. Okay, so even if you have a rental property on your own, you're technically allowed to depreciate that to get to zero. You can't create a loss with the depreciation. Now you've got this REIT with a whole bunch of buildings and a whole bunch of units. So we collect all the rent, or they do, they pay all the expenses and they have net rent income. Now they'll claim depreciation on all their buildings to wipe out all that income. So they have zero taxable income. Okay, so they use the depreciation to wipe out. So they have zero taxable income in the corporation, but they're still paying you 6%. So they're not paying it from the income because there is no income. So that's how we arrive at return of capital. So in essence, they're basically giving your money back. And that's why we have to, A, you get the money for free, and B, you are required to reduce your adjusted cost base. So the tax-free component really comes because they can claim depreciation on the building.
And distributions are paid either monthly or quarterly, depending on the REIT.
Yeah, depending on the issuer. So as David mentioned, a company that is raising capital through an exempt market dealer, through a dealing rep like David, is raising the capital, and there's different REITs. Basically, so it depends on the REIT itself. Do we pay monthly? Do we pay quarterly? Do we pay annually? But the other nice thing about a REIT is we have some control on where we're investing. So some of the REITs, for example, we use Poulos Investments. They're more Hamilton based. We use Centurion REIT. That's a big 150 apartment buildings across Canada, mostly in southern Ontario. We have Pier 4 REIT, where they're focused not only in southern Ontario but also out east. We have Avenue Living, where they basically focus in Saskatchewan, Manitoba, Alberta, and BC. You want to invest in the States, you can invest in Western Wealth. They invest and buy REITs in Arizona and Texas. So you can see there's a lot of diversification in a REIT. Where would you like your money to be invested? These high interest rates and everything that's going on in this country are leading a lot of people to look outside of the Canadian border for investments. A lot of people are investing down south. There's a lot of opportunities down there. The real estate market here, I mean, it's not as easy today as it is as yesterday as it was to invest in real estate in Canada, certainly Ontario. So
Himanshu, if I can jump in there, Jerry. Himanshu had a question. He said, are CIS real estate investment products eligible for registered plans like RESP and RRSP? By the way, it's 3:00, so let's look at winding down shortly.
Yeah, so again, CIS and real estate investments. So with Canadian Investment Services, we either access third-party investment products such as REITs, or we create our own investment products. Our own investment products are not eligible for registered products, which would be RSPs, TFSAs, RESP. But the third-party investment products, such as all the REITs that I talked about, all of those can be held in an RSP, in a TFSA, in an RESP.
And I want to mention that any of the REITs that we offer have been carefully vetted by the EMD, the exempt market dealer that I work with. But I am quite selective still, and I know Jerry is too, about the REITs that we like to recommend to people. And what I was saying earlier, I remembered, and that is that even though it's not on these investments are not available on the public exchange, it is a highly regulated industry. And as somebody who's had a mortgage license for almost 20 years, I can tell you that the amount of compliance on the investment side of the business is very high to make sure that people are getting suitable products for their particular situation. Colleen, you want to give us one more question?
One more
It's-
question?
Yes, please.
Okay, we'll
We
stay
can
with,
always talk more after.
yeah, we'll
Okay.
stay with the REITs. Can a corporation invest in a REIT, or does it have to be an individual?
No, a corporation, we do a lot of, REIT investing inside of corporations, yes.
Okay, great. So,
Yeah.
so I'm gonna put, my phone number down here. David,
I shake your hand and put my hands over.
and Jerry, what's your number again? I'm gonna put your number in here too.
My cell number, 519-942-0220.
942. Okay, so that second number is Jerry's, and if you're on this call, you would have received likely an email. You should be able to contact us somehow. You don't catch those phone numbers, but grab a snapshot of those phone numbers if you'd like to contact us. So we look forward to hearing you to answer all of your questions, and we can schedule you can schedule a one-on-one consultation either with myself or with Jerry anytime. We would love to meet and speak further. So thank you all very much for joining us. Colleen, thank you. You were a great audience member.
You're welcome.
Thanks to Dave Cubitt. He's going, if you can see in the background, people are busy setting up for the day's events. Again, if you're in the area, you're watching this, or you want to come out to Wasaga Beach, silent auction starts in an hour. Live music starts in a half an hour, all afternoon up till 11 o'clock tonight. Bands, individuals, duos, DJ, karaoke. It's going to be a fun day. And don't forget to check out the website, flyfearlessly.org. I understand it's down at the moment, but it will be up again soon, I'm sure. And you can see more information about Fly Fearlessly and donate there and get a tax receipt for your donation over $25. So Jerry, thank you as always. Greatly appreciate it. Steve, sorry we weren't able to catch you there today. Understanding there's a technical issue, but hopefully next time. And we look forward to seeing you all around the beach or somewhere else soon. So have a great day, everybody. Take care. Bye.